Hello and welcome to an absolutely oh my god kind of Friday on Crypt. Oh my god, the markets are roaring. So let's get right into what's going on. Bam. After days of pain of Bitcoin going from this 120K price down to $112,000, it's just been like brutalization. But look, we're back over the $4 trillion count. And why is that? Well, that is because today the Fed came out and basically said, hey, we're looking at rate cuts. The economy is not so hot, and we're going to have to try to do what we can to drop interest rates. That will boost everything from housing prices as people pursue mortgages all the way through to risk on assets as money becomes more available. Now, it's kind of fascinating to say, hey, the economy blows, but we are in this weird inverted place where basically everyone that's in value accruing positions is out of the dollar. They are in some sort of investment property, and that is because the dollar is being devalued, much to Bitcoin's core thesis. So what we're seeing is actually a big boon. Ignore the 1 hour, but look at the 24 hours. Ethereum is on the door to all-time highs, getting close to $5,000. Now, ETH heads have been holding on to this asset for like a decade, so they're rightfully pumped to see it go so high. Either way, I don't usually talk about price, but it is nice to see that some hope is on the horizon. Now, that being said, yesterday we saw an absolutely par for the course, ridiculous crypto event, which was that Kanye released the YZY token. So you've got this announcement coming out from Kanye himself, a very kind of half-assed announcement. He's got the cyclorama on his property, and it's money.yeezy.com, and even goes on to drop the contract address, which, at least does end in Yeezy, and that's kind of fun. But right out of the gate, we're seeing just this massive pump and dump, already dropping by 78%. This would need a roughly 366% gain to come back in. And the more people keep digging in, just the shadier it looks, right? From Bubble Maps, we found the identity of the first buyer. It's the same trader who made 100 million on Trump. These are sniper bots. And of course, we've got this great take from the Solana post that says 56,000 wallets participated in it. Of those, almost 15,000 lost up to 500, almost 1,500 losing to $1,000, and so on and so forth, with one wallet losing $1 million plus. Now, meanwhile, only 5 wallets made $1 million. Funny is we've got this guy who launched the Yeezy token, and he goes on to Instagram and basically pumps or is proud about the pump and dump that we get to see here, right? Talking about making all this money and basically what concludes insider trading. But again, we've seen that meme coins are not securities, so it's gonna be tough to say, like, is this scamming open and acceptable? Like, this really would feed back into the Trump coin, so the current administration likely not highly incentivized to deal with it. But this is something that we do need to discuss. And I think, Trump is in the perfect position to really leave office with some rules around meme coins. Once he's made his nut, why not exit and make sure that nobody else can do the same? It would make a lot of sense. Now, some other positive updates, and this comes from Peter von Volker, the lawyer from Coin Center I've cited in the past, but he writes, look, Assistant Attorney General Gagliotti gave an encouraging but incomplete speech at the AIP Summit. Now, what we're really getting into is talking about FinCEN guidance and the way they're treating people that write code, and this comes back, hopefully, to Roman Storm. It probably won't impact him now as it's too late, but their appeals court or the appeals process, this does bode quite well. And what do we see the Assistant Attorney General saying, right? Where the evidence shows that software is truly decentralized and solely automates peer-to-peer transactions, and where a third party does not have custody or control over the U assets, new 1960 B1C charges against a third party will not be approved. Now, remember, this 1960 is what successfully got pushed for Roman Storm. He did caveat, though, if criminal intent is present, other charges may be appropriate. So obviously, and it goes on, the apartment should not leave innovators guessing about what triggers criminal liability. That's what the Roman Storm trial is all about. He continues to say merely writing code without ill intent is not a crime. We will not hold developers responsible for other people's bad usage of their tools. So suffice it to say, these are very bullish that what's going on with Roman Storm is being seen by the broader DOJ, and we can't trap ourselves in this loop because everything coming out with AI, AI is really going to be text to code. That means freedom of speech, literally just saying something, and an AI agent can go and produce that code. So if we start to build this, we can easily get to a we can easily get to a dystopia where somebody just dictates to an app to build XYZ and suddenly they're criminally liable of a variety of things. This breaks down really interestingly. Obviously, we're coming from a world where building code took a lot of skills, a lot of intention, and now we're moving to a world where it really doesn't. I have personally been vibe coding a lot with zero background in computer science. So what if, again, you just dictate something into ChatGPT and it goes and it breaks the law on your behalf? We are getting into mucky territory regarding the First Amendment. So all very fascinating stuff. And, best of luck to Roman Storm. I hope this comes to support you. Now, last but not least, talking about Plasma, all the hotness coming behind it. They just did a release to Binance users, and that filled up, instantaneously. So the valuation of the XPL token has crossed $5 billion. And what do we get for that? Well, this is one of my favorite trends in crypto right now. Hyperliquid doing very quick perp listings. Now, I used to think that, FTX would list perps before tokens went live, and basically everyone would short it. And I didn't love it coming from FTX, but now I do see coming from Hyperliquid that they will take all of these hypes in pre-listings and give people an opportunity to rebalance it. I now think this is extremely healthy for the industry because we've gotten too far into a mode of early investors buying at a big discount, pumping the price, and using retail as that exit liquidity. I talked about this a lot in our market structure being broken and how basically we just made crypto into this the rich get richer kind of mode. And to be fair, that is largely the result of the Biden admin and Gary Gensler's SEC. It pushed all of that opportunity towards the wealthy front runners, towards the private investment companies. But now we have a balance to this, right? It doesn't work as well if all the private investors have to go up against these perps that go pre-listing, because the perps market can look at these projects and say, hey, we think it's well overvalued and we are going to short it before it even gets the opportunity to dump. So we are seeing sort of a counter thesis to what's been going on. And I think this is extremely healthy. This is the yin to the yang of the private market pump and the overly valued tokens hitting market, honestly, before retail has a chance to ride any of that upside, but before any of the inflationary protocol distributions take effect. And that's pretty nuts. So Hyperliquid's crushing it. Their volume is going nuts. They have crossed Tether as the most revenue generated per individual in the team. I believe the team is about 12 people and they're doing billions of dollars of volume a day. So props to Hyperliquid and props to the market discovering efficiency and balance. With that being said, it's not the craziest stuff, but the Jerome Powell news is getting everyone all excited. We'll see how these markets play out over the weekend and as this news begins to bake into more risk-on assets like crypto. With that being said, stay safe. Don't overlever. We've seen Bitcoin go to 120, down to 112, and just when you think you've got the hang of the ups and downs, it can invert on you. So stay safe, don't overlever, and I'll see you on Monday.